analyst Deven Choksey, Managing Director of KR Choksey Securities, joins us live. Deven, for our fundamental market watchers, there are two big stories this Tuesday morning. Number one, marked improvement in the CAD data and the power grid FPO, which opens today.
Good morning, Nikunj. Well, certainly I think the current account deficit data has been more on a positive side. But also look at, I think, the kind of impact which has come because of the gold imports. The gold imports actually have come down, and as a result of which it has definitely helped the current account deficit to, I think, remain on a stronger side, on a better side. Continue with this particular policy. I think one is having probably, I think, much larger comfort than earlier before to find, I think, the current account deficit on a very positive side. And should that be the case, then I think the India's monetary policy would probably, I think, start factoring this particular aspect a little bit more than otherwise, because along with the current account deficit, if we end up getting the crude at a lower price, I think, which is expected from the global market after Iran sanctions being lifted, in such situation, I think you might probably see the India in a better kind of a position, and that could also, I think, result into lowering of the rates of interest, though it may not happen immediately in a particular policy, but I think over a period of next 3 months. To my mind, I think this is structurally positive, and I would think that I think the market would factor very positively this particular aspect. Should see a good amount of inflow of money, I think, because of this particular factor, and that could probably keep the rupee also under check and could remain in the range of 61, 62 over a period of time. So all in all positive, I think, remaining quite positive, I think, on this particular aspect. Along with the outcome of the state elections, I think the market could show a new trend going forward in this month and maybe next month. So probably, I think, 6,000, 6,050 on the downside and 6,350, 6,400 on the upside for the Nifty, time being in the trading range that we are looking at.
Deven, power grid FPO kickstarts today. Is there upside potential from the higher end of the band?
Not too sure, honestly. I think we believe that the government may sail through with their FPOs. I do agree with that part of it. But the fact that I think the investors are not making money out of the PSUs, that's an overhang, and that's where I think the confidence of the people is not very high. Certainly, I think some of the large size institutional investors, I think they get the opportunity to enter into this kind of companies for longer period of time in the portfolio building. I think they may certainly buy. But if you ask me that overall participation in power grid is very, very confident, I'm not sure. I think the people are not very confident of putting money into this particular company, just because I think the government keeps on selling their shares in a discounted rate, and in turn, I think, do the wealth destruction. So that's the reason for which I think not very confident. But I would think that I think if more such kind of FPO comes in, then probably it may put break in the market, because the domestic institutions would sell shares and probably generate cash, and that's where I think you may have some check as far as the upside in the market is concerned if more FPOs comes in a quick succession.
Yeah, I'm completely with you, Deven. One real reason why markets have gone up is because we've not got any fresh supply from corporate India Inc. or from the government stable. And now with the power grid FPO, I think the government really the government of India, or this investment department, has indicated that other mega issues would be hitting the market very soon. But Deven, I'll stay with power grid. Let's address all the key concerns here. The key concern here is execution. But if I look at what power grid has done in the last 2 years, the track record of the execution has been extremely impeccable. They have a differentiated business model, and even if you buy the stock at the upper price band of 90 rupees, you're buying power grid at a price to book of 1.2 times, and the stock is still trading at a P multiple of 7-8 times based on FY14 estimates. So what is wrong in buying into power grid?
Absolutely. I think I have never not said that fundamentally these companies are bad, including power grid, I think including ONGC. They are not fundamentally bad companies. I think they are victim of the policy regions, I think, of the government. Of course, in case of power grid, I think it is slightly different vis-a-vis the ONGC. In case of power grid, certainly I think what you mentioned, I think, is absolutely true. I think the company is available at a valuation which is quite attractive. So that's why I said that those long-only investors who would like to put money into this company and stay invested for a period of 10-15 years, I think for them this could be, I think, a good opportunity. But those of you, I think those investors who wants to buy basically, I think, for gaining some momentum at the same time after buying, they would be disappointed, because I think time and again government comes out with the FPOs at a discounted rate, and that's where I think the wealth is not built. Look at the case of ONGC. I think the similar situation is continuing after 2 years of FPO being made. So from a perspective of I think making money out of government companies, I think investors are not very confident. Though I would agree that I think some of these companies, including Power Grid, the business model is fantastic. Probably I think some of the annuity-based funds, annuity-based businesses, I think in which I think some of the funds would like to invest. I think for them this could be I think one of the good companies which one could probably buy into the portfolio, but for a longer period of time, considering this overhang that we have talked about.
Deven, are you alarmed by the petering down in the auto sales volumes we've seen this month? And that's pretty much, goes across all categories, two-wheelers as well as four-wheelers.
I'm not totally surprised with these numbers. I think if I have to put it across, they are coming after the festive month. That is the first point. Second thing, the economy in general has not been improving. It is expected to improve in the second half, but it is in general I think not been improving. So as a result of which I think the buying is not coming up as strongly as it should have come up. Though rural India still supports I think the auto numbers, the urban India particularly I think disappoints I think to a greater extent. To my mind, I think in this particular crop season, after that I think you get cash, you would probably see some amount of buying taking place from the rural India into the auto sales. At the same time, I think more importantly, the commercial vehicle segment is disappointing, because the mining ban, uncertainty, and I think the not getting lifted in immediate future, I think that's where I think the people are more worried about. Should that happen in the second half, which is expected, then in my viewpoint, I think you could possibly see an offtake in commercial vehicle segment, and that could probably improve the maybe I think third quarter is getting over, but I think the fourth quarter of the working I think could be far better for the money of the auto companies. So remaining a little bit more positive than otherwise, and believe that I think many of the auto companies have the potential to jump and probably give better volume numbers going forward.
Deven, what is the big story in Arvind? At 132, how would you map the stock? How is the risk-reward ratio stacked up? And would you be a buyer here?
Well, I think the larger amount of perception for the Arvind has changed more because of I think the larger amount of brand focus I think they are bringing in. They are successfully bringing in some of the better brands. I think like we have been reading about it, that I think a $2 billion worth of business I think being talked about going forward from a brand called Children's Place. I think that's where I think the one is very excited about, that the company is changing its position from a pure play textile play, then coming to the real estate, and now into a more brand play. So from that perception, I think the market has given a good jump. I'm not too sure I think whether the immediate earnings would get reflected into the books of the company in immediate future, but the fact that I think they've started positioning themselves more on the branding side and the retail side, it raises I think good amount of confidence in the business strategy of this company, along with the modernization of the business plant I think, or the plants I think that they have. It could possibly result into the better opportunities going forward. So far we don't have any kind of view on this company, so would refrain from giving any recommendation, but certainly story appears to be more promising than before.
I may sound repetitive with this one, but this is just for the benefit of some of our viewers who've just tuned in. Should an average retail investor give the Power Grid FPO a skip? This is a good company, attractively priced, but unfortunately this kind of a business really fits the bill for a long-term institutional investor who's hunting for a 17-18% annualized return.
Yes, absolutely, Nikunj. I think this particular company, this business is more for I think those investors like insurance companies or a pension company who are basically looking at I think a regular stream of return coming into their portfolios through a business like this. I think Power Grid may be more of an annuity kind of a business where the assurity of I think earnings would remain for a longer period of time. So they do not mind staying with such kind of company for longer period of time. At the same time, I think their appetite is such that I think if the follow-on offer comes in at later date at a lower price, they would once again buy it. Whereas that is not the situation with the retail investors. The retail investor basically buys to see the appreciation in the portfolio. And if the appreciation is delayed beyond a point, then in such situation, I think he wouldn't be very excited to put money into this company. To my mind, given the opportunity in the market today, maybe the retail investor finds I think a lot of other attractive opportunities available elsewhere vis-a-vis Power Grid. So they may probably give skip, or they may not give very confident response to this particular issue at this point of time.
But Deven, what about the available arbitrage opportunity in power grid? I mean, shouldn't investors short the futures market and then, put in an application of a similar amount of shares in the FPO?
Once again, I think that may be more suitable kind of a trade for other than retail investors. I think generally those people who are doing the proprietary trading, I think for them the strategy which you just now talked about for arbitrage may be more suitable vis-a-vis the retail investor. Retail investors cannot probably, I think, look at these two legs of the market. At the same time, I think the vagaries of the mark-to-market onto the derivative side of the market. So for sure, I think the strategy would probably go well with some of the proprietary traders, I think, who could possibly look at the arbitrage opportunity in this company.
Even brand owners or mid-tier consumer names are making a roaring comeback. Bata followed by Pidilite. There is strong price action even in Britannia. So out of the mid-cap consumer group, tick mark your favorite.
Difficult question, honestly, Nikunj. I think the valuation-wise, I think most of the companies are premium traded. And the justification for this premium trading is very obvious and clear, that in an uncertain market, I think where you see the larger amount of growth coming in from a business which is giving a sustainable kind of earning visibility, I think that is where people are putting in money, but at an expensive price. So I'm not totally sure whether I think that trend would continue going forward if the situation starts getting normalized in the market and the follow-up buying takes place in some of the better down sectors where the valuations are attractive and the stocks are available at a lower price. So to my mind, I think whether one wants to put a fresh new money into some of the brand-oriented companies which are premium quoted, I would be careful in selecting those. I don't have anyone, I think at this point of time in front of me where I can put my money. So certainly I think keep my eyes and ears open and study more about those companies as and when the opportunity comes along.